think this works. All right, we're going to kick it off. Just to briefly introduce myself as well, I'm a policy expert at the European Crypto Initiative, and I have a really wonderful panel with me today. I think we're all eager to address some of the most important topics when it comes to the regulation, and we're not just going to be focusing on the EU, we are also going to be focusing on the US, UK, and the global regulations. So first we have Joshua with us, who is the US head of fintech and head of blockchain and digital assets at Linklaters, where she also is co-head of the global tech sector. She is one of the best known blockchain and digital lawyers in the US and globally, and has been in digital asset space since 2015, which is quite a long time ago. Josh is the director of the Wall Street Blockchain Alliance and chairs its legal working group. In addition, she is on the board of senior advisors of the Warhol School's Cyber Accelerator and is a member of the Warhol RegTech think tank. Then we have Ilsa, who is the general manager for Europe at the Verify Vesp. Verify Vesp, as you may know, they have a booth out there, is a travel solution that recently crossed the 5 million transaction threshold. Ilsa has an extensive background working for TradeFi banks and exchanges and entered the blockchain industry 5 years ago as a consultant specialist and go-to-market strategy and execution. She has been working with various projects on the Trevor rule for several years now. Then we have Giovanni, who is the chief executive officer at Gate.mt, the EU crypto-regulated exchange, part of the group Gate.io. He has vast executive experiences in the crypto industry and the evolving crypto regulatory environment. And last but not least, we have Juan, who is the chairman of the advisory board of Alastra, the largest blockchain platform here in Spain. His main activity is leading the digital policy of Santander Group. He has 25 years of banking experience in strategy, business development, and digital, and is coordinating the positioning of digital identity, MiCA, Digital Euro, and CBDC's projects. So thank you so much for being here today with me, and thank you so much for bearing with these introductions. Normally, when we open the panels in crypto space, we would go with when was the first time that you purchased a Bitcoin. Here, because we are talking about the regulations, we're going to tweak this question a bit, and I'm going to ask you, when did the crypto regulation and compliance turn out to be important for you and your professional path? So maybe Joshua, we can start with you.
Sure. Thanks for having me. So before I got into digital assets in 2015, for about a decade before that, I was a leveraged finance and securities lawyer. I had no idea I'd do anything with tech at all. And I started hearing about big banks beginning to think about using something called a smart contract to reduce the amount that they spend on lawyers. And so because I was working on loan agreements for large banks and others, I was immediately concerned that this was going to be the end of my job. So I started looking into it. And so that's how I first came into the space, was with a very skeptical view, which changed quickly.
Go ahead, Ilse.
Okay, my turn. Hi. So my background was very much traditional finance. I worked for a bunch of different investment banks. My last corporate role was with a leading derivatives exchange, and I was hand-holding clients through the Amir Dodd-Frank changes that mandated central clearing of OTC derivatives. And then I got assigned to an internal blockchain project where, believe it or not, in 2016, that exchange was looking at tokenization. And I got the bug, and I quickly left the exchange after that, realizing that what I knew about regulation and how it could really be a tidal wave for how the business was being transacted was going to arrive into crypto sooner or later. So that was my trigger.
Juan.
So as you mentioned in the introduction, and first of all, thank you, Victoria. I see her there for having us, for inviting me. I've been all my life into the investment banking, so in the trading floor, capital markets, and specifically in equities. So back in 2010, I would say, we heard about the Bitcoin in the trading floor. Hey, this is a very fancy stuff. You should have a look at it. And as practitioners in the portfolio designing and into asset management, and from the sell side perspective, we started having a look into this very specific asset class. Now, fast forward to where we are now, we see a more mature market, very promising, interesting, getting adoption, and we're looking into different opportunities, mainly in the institutional space. So maybe we can touch on later on in the panel if we have time. But this was maybe 2010, very early days. Nowadays, of course, we've been figuring it out. We've been struggling to take it to the mass market. Now with this new regulation that we're going to enjoy, at least here in Europe, we'll have more chances to go mainstream and to design a true asset class in itself.
Thank you. Thanks, Anya. So my background is more in classical finance, but I moved to crypto around 2018, when Malta was one of the first jurisdictions in Europe that started to open to the framework. I started to realize pretty much there that, even if this was a green field, everything seems to be new and available. There was a total lack of regulation at the time, and we had some little glitches, let's say, some small level scandals that just brought us to the point, yes, this is a completely new, but there is one aspect that no one thought before. Just to tell you, I was in touch on the beginning from few of the people that were part of the cyberpunk movement, on which the papers that led to the creation of blockchain was created. So lots of excitement. This is completely new, completely for everyone. But then we realized when we start to move to the market, glitches in the systems were there, few issues start to come, and then we had to take a step back. No, there needs to be some regulation. And slowly we start to build on that side together, from the business side together with the regulator. I think there is still a long way to come, but we are on the right direction now.
All right, so from smart contracts and us being afraid that we're going to lose jobs to the regulators today, knowing that MiCA is coming, Giovanni, can you take us just a bit further on? Like you mentioned Malta, and Malta in Europe was really one of the first countries to introduce the regulation. So what happened since then? What happened in between so that now we have this overarching European regulation, and how does it look like?
It looks like, let's say, promising. Let me keep on a positive note. It looks promising. Again, there is a long way ahead of us still to be completed. But again, I can see MiCA from two perspectives. From one side is a point of arrival from the people that start from the beginning. They started to put the framework together, and as we say, us in Malta were among the first one. Lots of suggestions were put in to work, but then now there is the second part, because the market is much more mature as it was at the beginning. There are more issues that are coming. As we say, MiCA is coming in place. Are all the single regulators of each country going to react and be ready at the same time with the same pace? Are we going to have all the escalation that we pass to the regulator implemented? I'm not sure. It's a good starting point, but there is a long road that still needs to be completed from that point.
And Juan, would you say that this regulation now helps traditional market adopt the blockchain technology, or do we need more regulations? Do we need more laws? What does traditional market actually need right now?
I would say, well, from what I get from members of our Alastria, of our organization, and the advocacy that we do, that regulation is pretty much needed. There's been lots of time of illegal, I wouldn't say, of course, illegal, but illegal environment, illegal activity. The first piece of regulation that always comes into a market is taxation. We don't care what you're doing, but you have to pay taxes. Yeah. So this was the first. It's a bit unfair, but of course you have to pay the whole, things that we have to pay as a common goods in the society. This was first. Second one, of course, is AML. Whatever you do, you should do avoiding any anti-money laundering and the compliance piece. Now that it goes in seriously, like big adoption, when you look at the numbers in terms of adoption in certain countries, and specifically here in Spain, if you read the Chainalysis report every quarter, you see that this is growing. It's more than from 12 to 15% of the population that recognizes that used to have had or already have in their portfolio cryptocurrencies. Now this is 15-ish%. Now you need to regulate. There's no other way. So there's been an effort in the digital package of the European Union, jointly with DORA, MiCA and DORA. We have to get better in names, because these names are a bit, when you look at them, looks like cartoons. There's been a big effort in taxonomy and also big effort in establishing vehicles, new licenses. But let's be honest. This effort has been boosted by the urgency of regulators to defend themselves from the stablecoins. These combined with the pilot regime, which touch on the financial instruments, both together with MiCA, which deals more about the monetary instruments, makes a nice environment, to play with, and the traditional players are going to enjoy these two pieces of regulation, and I'm sure it's going to scale up a lot.
So Juan mentioned that we are getting more and more people adopted in this market and using crypto assets and all this technology. Now, whenever we purchase the crypto assets, there's normally some sort of a KYC, off-ramping, on-ramping, and what I heard before was the travel rule. And I'm pretty sure that not everyone in this room actually knows what the travel rule presents. So Ilsa, could you enlighten us please on that topic and tell us what it stands for?
I would be happy to. So the travel rule, for those of you who don't know, is a regulation that's being rolled out across the world. The background to this is that in 2019, the Financial Action Task Force, which is the regulatory watchdog, the anti-money laundering watchdog, opined that what was the case, the travel rule, which is an American terminology, the mandated transfer of a certain amount of personal information that travels with wire transfers in traditional finance was now to be applicable to the crypto industry as well. And so since 2019, each individual regulator has been tasked with creating and implementing regulation that follows the travel rule. So what you have is something that we call the sunrise period, and this is this kind of limbo period where some jurisdictions are live with the travel rule, others are not. Some haven't even started. So the FATF isn't thrilled about this. They really are urging, especially on the back of geopolitical events, they're urging regulators to come up with legislation and implement it, and, big word here, enforce it. There's just literally been virtually no enforcement to date. So what we have today is we have the travel rule live in countries like Singapore, Korea. We actually have it live in the UK. We have it live in the US, but it's absolutely not being enforced. MiCA has, along with it, the AML package. The transfer of funds rule will govern the travel rule, and that will come live at the end of next year as well. So from a user perspective, it means that going forward, yes, you had to do your initial KYC, but at the point of time of the transfer, you may actually have to give that information again, or a certain amount of information. The virtual asset service providers, the VASP, so the exchanges, the custodians, are going to be responsible for ensuring that, remember, this is private information, this is very highly sensitive information, that they have the right types of solutions to, fully encrypt and make sure that data travels securely.
So just one more KYC and that's it from now on?
I think it's a little more complicated than that.
Cool. Yeah, I saw you previously smiling when the taxes were being mentioned, and I really wonder what is the current situation in the US as well. Joshua, can you lead us through the landscape of the US? What is the current situation both with taxes? What are the case laws? What's happening with Sam Bankman-Fried? Where is the case law right now?
Wow. Okay, so that's pretty broad, pretty ambitious. I will say I'm not a tax lawyer. I'm also not a litigator, so let me just say that. What I would say in the U.S. from a broad perspective is that I think the industry is finally being heard by the courts. Right? For the longest time, we had the SEC and other regulators saying everything is absolutely clear. It's clear. It's clear. And some of us have tried to, go along with that in various ways. But we're seeing a wave of enforcement that's actually been going on for quite some time, and that the regulators said they were going to do in response to basically reports that they sent in response to an executive order by President Biden, I believe, last year. And what we're seeing, though, is that the regulators aren't always winning in court. And this is a big change. So you may be aware, for example, of the SEC v. Ripple case. Right? I won't go into the details here, but this was really a sort of mind-blown moment for many in the space, and probably for the regulators as well, that it came out that way. And we have, of course, judges with differences of opinions, even within the same district, right? So we have Judge Rakoff in another case, which is SEC versus Do Kwon, which came to a different sort of rationale from the Ripple case, but at a different stage on different facts. We're seeing things, whether it relates to DeFi, where where judges, very important judges, in fact, the same judges that are hearing the Tornado Cash case and also SEC v. Coinbase, where in a private action against Uniswap Labs, right, and some various other parties, they said, actually, SEC, you're behind in DeFi. This is a matter for Congress. And also, why would we hold a company like, for example, a provider like PayPal or Venmo liable for acts that occurred by third parties using their systems? So it's a very interesting space, just even staying within securities. Some other quick highlights, of course, with tax, yes. The IRS wants you to pay taxes, and for a few years there has been a sort of check the box where you have to acknowledge, that you were trading in crypto, buying and selling crypto on your tax forms. But more broadly, there's a focus on things like DAOs, and frankly, and this goes to national security and related things, how to hold liable and who to hold liable and what to hold liable to stop certain flows of funds or flows of tokens or in or out to what the government may call bad actors. Now, there's many other things at play. There's legislation, some of it very promising, very comprehensive, but given what is happening in our Congress right now, that we don't have a speaker, really nothing's getting done. So I think, I'll wrap it up, but one of the things people have been saying is, maybe it's a matter for the courts, and it's really interesting to see what the courts are deciding, because it's not always what the regulator wants, and I would credit those who've been writing amicus briefs, many well-known lawyers in the space and others, and even Congress people submitting to kind of educate the judges. But so, wait and see.
And is that something that actually very much helps, the amicus briefs? Personally, what is it that you can contribute to the regulators and to the courts so that they know what they're dealing against? Like previously we heard this is very novel technology and we are afraid of it. So I cannot expect from the regulators to know all the nitty-gritty details of the technology and what risks it poses. How do you educate them? What do you do?
So I would say within the US, the major regulators, many of them understand the technology pretty well by this point. Like the SEC, CFTC, others, they have a pretty strong grasp. I mean, we've been fortunate that at FinHub at the SEC, there hasn't really been turnover in that group, so the knowledge is there. I think the challenge is educating Congress people, so our lawmakers, and educating the judges, right? Because just as bad facts, we say, make bad law sometimes, a lot of the learnings that may take a judge and his or her clerk a long time to try and look through. I mean, you may be familiar with a chapter by someone named Lewis Cohen and others at a firm called DLX, where they did an exhaustive analysis of case law over the years about how to interpret the Howey test and made some arguments relating to secondary sale transactions. That sort of scholarship, a judge can't do on facts in the moment, so I think that's key. And for example, Cynthia Lummis, one of our Congress people, she contributed to an amicus brief that someone named Kayvon Siddiqui, who's also at another firm called Jenner, who, I'm plugging all the firms, but these are important people and important thoughts, and basically said, yes, these are matters for Congress, and guess what? Congress is working on them right now. One thing I didn't say, I'll just wrap it up for a second, about SBF. I mean, that trial continues to go on. We haven't yet seen the defense's side. The prosecution side, I sat in for a day. It seemed quite strong to my mind. But certainly, we don't know what the defense lawyer may pull out of, the defense lawyers may pull out of their hats.
Let's see, we're going to give you a call whenever that happens. And going just back to the understanding of the regulators, Elsa, would you say that FATF, for example, or the UK regulators have a really good understanding of how the technology is being used right now for transferring all these data, informations? And would their main concern be perhaps privacy?
I think absolutely a main concern is definitely privacy. I would echo what Joshua just said, which is they are, leap years ahead of where they were 2, 3 years ago. So we were talking about the European Commission, for example, that brings in very, very knowledgeable experts on a temporary contract basis. The FCA does the same thing. So I do think that the level of knowledge is increasing, but we have to have a dialogue with them. The only way that we can, I was having this conversation earlier today. Somebody was asking, why are you regulating this? I'm not regulating it, but why are we regulating this when there should be technology solutions? Because technology firms and regulators have not to date worked hand in hand enough. Certainly not for product development. Once the product is there, of course, but for actual product development, I think we have a long way to go.
Juan, you're traveling back and forth to Brussels, you've been to Madrid, you're going to Lisbon. What is the work that you do there? Do you also sit down with the regulators? Do you educate them? Do you speak to them? How do you approach them?
Yeah, pretty much so. Specifically in Brussels, I would say, we do a great effort. The outreach there has been important, but the political will has been always there as well, which is helpful. Trying to develop the market, trying to be competitive. As Europeans, we are, most of people here, but we are lacking growth. So we need new industries to grow, and we need the innovation to flourish. So the political will has been always there. What the people you find in the DigiConnect, for example, is technical people. This is engineering people. It's people that have the skills, that understand the technology. And the digital package comes with this part of competitiveness and also self-sufficiency in terms of technology, and not to be in the hands of other jurisdictions, of other geographies providers. So this is on one side. Of course, the regulation that came up is not perfect, we all know. It comes in chapters, and it comes in priorities, as in a company, as in an association that we run. We have priorities. Priority was sovereignty, monetary sovereignty. There was this fear of a new monetary instrument coming into the market and wiping out the euro. Yeah. Now the challenge in the European regulation, which is the one I'm more familiar with, is the level 2 regulation. We are in the middle of the RTS, ITS process. Maybe for the non-lawyer people here, you have the final text of MiCA, but it's not enacted until the mid of 2024. In this period of time, from now to June, actually before June, we're going to have this level 2. How we connect, how we make it consistent with the current regulation, how the grandfathering is going to work, how all the procedures are going to be put in place, how the supervisors, not the regulators, how the supervisors are going to do their duty. They don't have the tools, they don't have the people, they don't have the processes in place. Now they have to figure it out. And they're going to use European funds in order to build these new supervisory mechanisms. Of course, connected with all what the FSB is recommending, with all the IOSCO new recommendations. This is truly important. International harmonization, but this level 2 regulation needs lots of detail, what we're still lacking in the ecosystem. That is why maybe traditional players are not jumping into this specific market for a while.
Just because you mentioned the IOSCO, I definitely want to touch that topic as well. I see Joshua already nodding. Do you know anything about IOSCO? They just issued a report. They were gathering all the responses. What's your opinion on that?
So the report by IOSCO that focused on DeFi that came out in September, the point, for those who may not be aware of IOSCO, it's the International Organization of Securities Commissions, right? So it covers about 95% of the securities markets around the world, and I think 130 jurisdictions. They have had a task force or a group that's focused on this. One thing I would point out, maybe I'll point out 3 quick things, because I know others have thoughts about this as well. One is, and this goes to the international harmonization piece as well as the US. A lot of people will say, okay, I don't like, hypothetically, someone might not like what the SEC is doing in the US or some other regulator. And they may say, okay, I want to go somewhere else, but also we want harmonization, and this will sort of align things, and the SEC won't be able to keep its hard line. But it's important to remember that for this, there were 9 recommendations in the report, and hopefully this will be finalized by the end of the year. That's their goal. But it was led by the SEC. The key draftsperson is the head of FinHub from the SEC, Val Stepanek, who is very knowledgeable about digital assets. But there's very much a focus on some of the same approaches that we've seen from the SEC in cases that it's brought against digital asset trading platforms. For example, saying, how do you map this? How do you map digital asset world and DeFi to TradFi and the various functions? Right, so that's important. There's, I believe, recommendation 2 focuses on whom do you hold responsible? Who is it? And it operates from this idea that there's always somebody responsible, right? And it sort of comes at things from an idea of, at least to my mind, this is my personal view, things are never really, truly decentralized enough that somebody's not responsible. So I would say, the final thing I'll just say about this is, interestingly, and also the CFTC was another contributor as well, so it's both of those two big agencies, as well as many other groups from around the world, governments from around the world. But this idea is, look at your own laws. So even though it's harmonization, it points governments back to their own legal regimes to find answers.
And just to go to that point, fully decentralized, it might be a spectrum. It might not really be something that the regulators see as a clear-cut thing. Giovanni, I do have a question for you. You have an exchange here. So what is the plan here? How are exchanges supposed to react to MiCA and the requirements around stablecoins, especially if the stablecoin is actually provided by a decentralized platform?
That's a very good question. We are just doing things just one step at a time. As I say, we're trying to interpret what the MiCA is requiring at the moment from us. And we're just going to implement one step and just get things done. There are still some things that needs to be clarified. At this point about the stablecoin, the fact that are going to be delisted, we need to receive a little bit more clarity from the regulator. It's going to be pegged to the euro, and if that's not going to be the case, are we going to lose some competitive advantage toward other jurisdictions? Because, of course, we're going to compete with Asian market, with American market, and this is going to be working in other ways. I see that we need to continue this discussion with the regulator, have a little bit more clarity on what's going to happen, and one step at a time, the exchange, we are going to adapt, and, for sure, we are going to follow what needs to be done.
I just kind of want to gather from you all, what are going to be the steps that we all do in 2024, let's say, so that the regulators perceive blockchain and crypto assets as having some social background, some social impact as well? Is there even a possibility to achieve that, or is it always going to look like a fight?
I mean, I have an idea if no one else has one. So it would be an indirect social impact, right? But as we see AI, the proliferation of different kinds of AI, generative AI, et cetera, and we have things like deep fakes that are getting better and better, and other kinds of, developments. I think one of the things that we can point regulators and others back to is this idea that holding aside digital assets and any kind of finance use case, a blockchain provides for secure data sets. And actually, maybe a real-life use case would be authenticating, so when your government or a particular person says something. And people have been saying this for a long time about, battling so-called fake news and stuff by using blockchain. But I think we're entering a phase. I believe that there's one jurisdiction or another, it was mentioned to me, that was requiring watermarks for the use of AI. I actually think that's a bit backwards, because to me, assuming this is a real law somewhere, it would seem that sort of the good people, the compliant people, would comply, and the bad actors are not going to watermark that they used AI. And so I actually think the other way, having credentialing through a blockchain, could be very helpful, and it certainly in many instances.
Yeah, thank you for...
You asked about the crypto or the blockchain, because I see crypto as a good for the society in terms of banking the unbanked and getting to certain parts of the world where maybe fiat is not able to do so, or maybe a bank, a traditional commercial bank, is not willing to do so because it's not profitable. But this is the classic financial inclusion thesis, but I see more good for the society in the infrastructure itself. I see ESG use cases more and more surrounding us, like the carbon credits or measurement of the quality of air, things like that. Also this WorldCoin concept of every single computational power you put in an AI that is disrupting or disintermediating labor can be offset by this WorldCoin concept, for the people that maybe is not able to upskill or to reskill at a proper pace. I see these ones, but I see definitely and for sure more goodwill for the society in the infrastructure itself rather than into pure crypto. But this is maybe my thinking.
No, for sure. I mean, even looking at the Chainalysis reports, for example, the ones that were recently published and the blog posts that came with them, we can see that there is not really a lot of percentages of crypto assets being used for illicit transactions, and that the crime rates that we normally see in reports such as IOSCO and everything is perhaps a bit of a misconception in this space. So I really wonder, Ilse, do you have any opinion on how, for example, this technology can be used to tackle crime as well? To maybe even help police or Interpol or people investigating crime?
So I know from speaking to actually US financial crime investigators that the TradFi side drools at the tools that we have on the blockchain, right? They say, wow, if we had ways to track the dollar the way you have to track blockchain addresses, et cetera, it would make our lives so much easier. So on the one hand, yes, there are, politicians that will push the agenda of crypto has no use and is just used for crime and terrorist financing. There are the reality is actually the traceability of crypto generally makes it much more useful for financial crime fighters. And I think we're just at the very early days of that. I think that will, along with digital identity and regulation, we will get to a much more interesting place for crypto. And I think in light of a lot of the debate around, I'm sorry, Joshua, de-dollarization, right? It's not so much that another currency would replace the dollar, it's that some countries may want to have choices, and crypto does offer a choice.
That's wonderfully said. I know that we only have a bit more than 2 minutes, so I'm going to give you a round of opinions or maybe just a statement that you would like the audience to be left with when they leave the room. What is it that you think is it going to be the regulatory challenges are going to be even worse in the future? Or what is that one thing that you really want the audience to feel or to have from this conversation?
I think that is just the importance to continue to work with the regulator, not to get frustrated on things that are not going to come in the short term, but continuing to build this conversation for the long term.
I would say that the innovation is a continuum, which is good, and technology goes, of course, faster than regulation. This is stating the obvious. And it's happening in every single place you look at. I take care not only of the blockchain piece, I also take care of the AI piece, the data, the quantum computing, everything that has to be regulated or would be regulated in the next 5 to 10 years' time. And blockchain is not an exception. When you look at AI, for example, AI Act in Europe is a dossier that has been in the oven from 2019. They were about publishing it, and all of a sudden, the generative ChatGPT and the rest, they came over. So now the dossier is totally obsolete. You have to rewrite again. So the challenge here is coping with the phenomenon, being up to date, and react to every single phenomena that is out there that you can see in congresses like these ones. And we are already late. In Europe, we are not covering DeFi. We're not covering DAOs. We're even not covering NFTs. I know there's been a kind of a souffle effect in this world, but we're still not there. We're in consultation process. So Mika, again, 1.0 looks nice, but we need a 2.0, even a 3.0, as we had MiFID 1, MiFID 2, we'll have MiFID 3. It's a continuum. Coping up with it is a difficult one.
Thank you so much.
I'm going to take it from the point of view of the virtual asset service provider. So if you are an exchange, a custodian, you think you might qualify as a virtual asset service provider, that's the first thing to do. Figure out where your legal entities are. I hope you would know. But figure out whether you qualify as a virtual asset service provider, because you could be a VASP in one country and not in another. If you are a virtual asset service provider, look at the legislation in that country. Are you going to have to be licensed or registered? FATF has announced from an AML perspective that is either licensing or registration, and then what those timelines are and work from there. That's a huge challenge. If you have a lot of legal entities, you've got to get started now because it's happening. But I will end on this. Sorry, just one last note. It's not all bad. I came from, as I said, a publicly listed derivatives exchange. We promoted fair and efficient markets. Crypto markets today are not fair and efficient. FTX was not fair and efficient. So regulation is trying to create fair and efficient markets.
Thank you. Go ahead, Joshua.
So when I look back at not the most recent European blockchain convention, but the prior one of the questions that was asked was, will SBF be the next JP Morgan, meaning the lender of last resort? And then at the most recent one before now, it was, oh wow, look what happened with FTX. And now he's being tried as we speak, right? And yet builders keep building, crypto keeps moving, the law keeps getting figured out, and I think I'm just very optimistic about the space. Let me just say, I think we may not have said none of this was legal advice, investment advice, anything other than our personal views, and certainly not tax advice. But I would say, speaking of the U.S. for just one moment, because that's where I'm from, it's looking like we'll get a crypto ETF, right? The SEC had a ruling against it saying that it acted arbitrarily and capricious, which is a really high standard with respect to its denial of grayscale. We're beginning to figure out the law, even though it might be very messy in the U.S. But I think usually, in past years, I'd say go outside the U.S., but I think, it's looking promising, and it's looking like we're going to get some answers.
Thank you so much. With that, I hope you got a lot of answers, and if not, you can approach the panelists at any time. I think they have more than one answer spared. Thank you so much for your attention, and thank you to panelists.